Come on down and get them Hollywood Trades. We are doing a post NFP non-farm payroll review. It is as we analyzed. We are starting with gold, and there's not much. I'm gonna just go over every market really quickly because this is as analyzed. As we see, there was high liquidity at all of these levels. And suspect at the higher time frame of this level here, because usually when you get a rally like this, it exhausts all of its buying time wise, because a cycle can only last for a certain amount of time, like right, like up and then down, and up and then down, and up, and it usually only lasts you really until the structural liquidity, and then it'll pop, and then this is the structural liquidity, and then it'll pop, and this is the structural liquidity, and then it'll pop it, and then come down, right? And so down, and then we had the up, and then the structural liquidity is here. So boom, we get it down, then the structural liquidity is here, then we get it down, absorb some more from this block here, which I believe absorption from this block here, excuse me, oh my goodness, it would usually get us back up to here and beyond, and really get us a bullish imbalance. But there was no bullish imbalance after this. Maybe this bearish imbalance caused like an equilibrium here where it would have been bullish imbalance here, but this bearish imbalance kind of pushed us this block here, and it all kind of pushed us this high, this close to this high is a consolidation range, as well as this block here being a no trade through the 50% of it range, right? I'll go magic there. And so this is what we have on gold. I do believe that our ultimate goal is all-time high again, plus this imbalance, but we may need to come back for this, maybe clear all of this, wipe all of that out, plus clear that imbalance. Hopefully this body gap right here is not an issue, because if so, and needed to mitigate this back again, may be an issue. But we'll monitor the closes on gold to see if we have gotten a bearish close under this bar. And as we see this wick right here, we got to see how it treats this wick, because we know that that bar retest is going to incorporate that wick. This is a really sharp bearish zone, and that's what we're seeing there. I'm going to try to make this quick because there's not much. It's all just consolidation. We're going to go over to the US dollar here, and we are still falling we are falling well into the sell side imbalance range. This was the goal. I didn't have it marked because it's inside of a small FEG. I'm not even going to mark it. It's just too much. But the low is inside of this. We expect it to cover this or potentially use all of this as the zone right here. Let's go ahead. I had this as an incomplete rebalance. Let's go ahead and move that down, because the incomplete rebalance is actually down here now. This is going to be your infamous IFVG. I'm going to leave it just like that for right now. This sell side, I'm not too much interested in the break point. But because it is such a clean point of breaking, I am going to I'm going to delete this. I am going to turn this into a breakpoint, because it was a really clean bearish displacement on this DXY, which by all means definitely should have made gold go up in these last 4 days, but it did not. This is all liquidity. The liquidity is just too heavy. If it's too heavy, it won't matter. Your inverse market play will not matter at all here. We're going to have a mean Fibonacci retrace short possible here, because unless we start getting levels like to stack on here to get to this is just going to be a mean Fib retrace. If this is all white right here, mean Fib retrace is going to let go and smack this really hard. Break, right? Retest, boom, and probably kill this low again. I don't know. We don't know right now. You know, we trail bar by bar in the bar method, and that just keeps us from doing or thinking anything that we shouldn't. Let's go to NASDAQ. NASDAQ has been bearish. We have seen, okay, we hit another sell side in NASDAQ on the non-farm payroll. Jigger jagger, as we see here. Definitely expected after hitting that sell side target. Expected, boom, we popped. This is the low, the lowest low, and then this next candle broke the high of that candle that went to the lowest low. As I always say, once it pops those orders out of there, it'll either come back here for a bearish close, or it'll have a bullish close, and then the next bar we usually continue to push through all of that. So now what do we have? We have an infamous break or a block. So with this block being here, now we're going to start seeing a little respect here, and there is a small imbalance in there. So all of that was very nicely scripted inside that range right there. We're going to just leave that there going into the week to see how we treat that. These are basically, let's say balanced price range. And you have yet to close over this bar, so we'll drag that until we close over it, right? And so this is just our testing ground here till we close over it. There is this big block right here also that is really the issue. It's body level and it's low are going to be an issue. So we'll see how it plays. My idea is that it will eventually come up and reach for the rest of this imbalance here, using this as a trampoline to get there. There's just a nice target right there in that high imbalance, high target. This would be an easy go. It shouldn't be too hard, especially with the dollar index being so weak. We're not going to look at the rest of the indices. Big consolidation range here. We'll have pretty much between here and here, this whole dealing range from here to here. There's no imbalances here, so that's just indicative of consolidation. We have this low being I'm just doing platinum for a bonus read for anybody who likes to dibble and dabble in this chart. That does count as a sweep because there was no close under. So we expect all this to be consolidation. There is a bullish gap. We'll see how it treats that, because everything should be fairly bullish with that DXY being it's just melting. It's on a weekly tear to the bottom. We're going to do EU and GU as well. We have gotten our daily goal. With EU, everything is just super bullish. This is our I hate to put a line on a line, but basically this is our goal. I'm gonna put a goal here as buy side, but I'm not gonna carry it across the chart because this algo resistance these levels are very sovereign. They are very tested levels. That's how they become algo SR in my book. And then we have, right, an imbalance here and an imbalance here. So we have plenty of buy side to test up. And I didn't think EU was gonna recover this range so fast. Like, we dropped from here, and it was just such a train of a negative flow down into this area, and we just caught into all that support and just breaking everything here. I'm gonna delete this. Most of this is just non-important right now. Most of this is very unimportant, not important. Uh, Again, we met that. So all the goals have been met. There's no reason to mark these as break and retest. This was a weekly. We'll go ahead and turn that into a weekly. What does it look like on the weekly? All right, exactly. Just closed over. So that is definitely going to be an IFVG for certainly. An IFVG. I'm going to keep this on this chart only. I don't want to see it. I'm going to delete this as well because that's a non-factor. I'm going to delete that. That's a non-factor. Just repulsion, and then that target up there, clear to see, clear as day. And this is the next imbalanced range, so I'll pull that over. We expect something there. I'm going to delete a lot of this and clean this up. Monthly balance. Yep. IFVG. So this should be acting as support as we dip down next week. We may dip down into that, or we may just keep blast. That's an elephant bar. So there's a lot of bullish liquidity underneath these levels now from like that promotion block is dead. So basically, since we closed over this gap range, we're going to be seeing what we do here with let's just say that's that as well, because it is, as ICT says, it should be used as a mountain climber. These zones should be used as flip bullish now in these zones, and we should be seeing that. If not, then we'll go from there. But right now we are super bullish. GU, what are we looking like on GU? We are within the Fibonacci range. That is where we basically put our target at. And when you are going counter trend, we broke this with a close underneath. So that to me is a break. We do have this, which caught us. So, but to me, we are in a downtrend because we did break a primary level. It's consolidation range, really, is what I would classify it as, where you're just stuck in between this dealing range, basically, or like I said, last analysis, between here and here is where we're stuck at right now. So anywhere between here and here is the goals. If you are trading back towards this imbalance, your first take profit would be here at this 60% fib always, and then you just rearrange from there, and then you just scalp and hunt highs. If we get bullish opportunities, we just hunt these highs. And so we're using in the bar retest, we will always use the last previous bar as the retest point. We may even use this because this was the last bar closed, the last level really closed over here. So this high and this IFVG right here should be used as support, just as we see in EU. And last but not least, Bitcoin. We see right here. I mean, you can see a lot from the weekly. A lot of people don't really look at the weekly, but you can learn a lot from the weekly and the monthly, and of course the daily. But this is in the mean consolidation range as well. You see where my target was at. We are this target here is basically telling us where where I believe we should be gravitating, and it's nowhere. There is a CRT high here, but it's just this fib range, which is basically from the low to this high here, is just charged bearish right here. And so we're basically consolidation range between here as well. You can play these ranges on the hourly or on the 4 hour if you wanted to, using like 15-minute imbalances or something like that. If you can catch them, respect it, like this one right here. Once you cleared it, once you hit that block, and then you hit this right here, you target here for CRT. And then if you want to extend it, 50% of this is the only place I would target. Of course, we would want this, but the consolidation range is just tightening up. So you just always want to go to the 50% of that nearest capping block, which would be here, and then obviously like here now and here. And then now we got a smaller dealing range, which would be here and here. So it's just, that's what happens in this descending wedge, descending, retreating volume at that point as well. Let's just see what the average daily volume is looking like here. Okay, not bad. Big bearish volume there. Not a lot of volume coming into pre-non-farm. Our volume cycle is nice and healthy. Boom, low, high, low, and then we should get another high somewhere in here breaking out of this range. Says in April. So March is going to look like a consolidation, it seems. And that's pretty much it. We'll go Ethereum. Yeah, and it's crazy that everything is super bearish. It's just the liquidity. The United States dollar is dropping, and we are still not getting that rally. So that lets you know everything is not there's not equanimity in the market right now. With what we're just seeing a devaluation of the market in general. So that's pretty much that. We're at 17 minutes. This is a really long one for me. Usually try to keep it at 10, but this was a multi-market update going into the week. I hope this helps some people understand what we're really looking at market wide. Some people like oil too. I haven't looked at oil for a few days, and oil is following bearish right now. We have a bearish imbalance up here, a bearish block, and a break point. We did break the high of the lowest block, so we are probably going for that imbalance right there. We did break below this break point too as well. However, we did seek the lowest low, and again, this is the dealing range. So from here to here is the bullish dealing range, and so all of this sell side back to here was, as we say, we're using that whole range. Of course, that 60% retrace was good, and then we created an imbalance, but that imbalance was disrespected, which means we'll seek that all of that is just beautiful, low resistance liquidity. As you see, it fell into it and just waterfalled all those stops. All this is just point blank stuff, like same stuff that we use day in and day out, and the simple range, dealing range notes, and our bar retest notes. So just stick with us. We'll try to stay up to speed on all of these developments as they happen on the dailies and the hourly charts if we can. And I bid you a arrivederci on this one.